It's not that we are facing this for the first time. I think this is another one which we will have to navigate very calmly. The point is, this is different than what we faced in the past. This is like fighting a ghost.
That was HDFC Bank CEO Sashidhar Jagdishan on an interview call with the Economic Times banking team about a rare governance tremor at India's largest private bank. Last week, the bank's non-executive chairman and independent director Atanu Chakraborty walked away. Not quietly, but with a letter that used words, I quote, "happenings and practices not in congruence with my personal values and ethics," end quote. The fallout was immediate. Markets reacted sharply. In a rare step, the RBI stepped in to reassure depositors, and yet the discomfort lingered. What made it murkier was that just 2 days before Chakraborty's exit, 3 senior executives in HDFC's Dubai unit were sacked over issues raised by wealthy clients who were sold high-risk bonds tied to Credit Suisse, which collapsed, raising questions over whether the risks associated with those instruments were properly explained to the clients. The bank says it's a documentation gap, not mis-selling. But when accountability starts surfacing just before a chairman walks out, the sequence raises questions. So what exactly happened here? Was this about one incident or a build-up over 2 years? Was it governance friction between board and management? Was this stress emanating from digesting a $40 billion merger? And of course, how will HDFC ensure that this does not happen again? Listen on, it's Tuesday, the 24th of March. I'm Anirban Chowdhury. This is the Morning Brief. Here's Jagdishan again talking to my colleagues about whether he had any inkling about Chakraborty's impending resignation and the furor it would create.
We had never anticipated this. A 5.5 year where Atanu Chakraborty was at the helm. We asked him, and we saw these insertion of these 2 contentious lines. We said that, look, we have a well-established process which you have instituted so intensely. If you have concerns or issues, put there and we collectively address it. To which he said, I don't have any. Then you please remove the lines. Yeah. To which he was steadfast and he refused to budge. The very next day on 19th here, Mr. Chakraborty, I believe, but the headline screamed to say that my resignation was routine in nature. There is no wrongdoing in the operations of the bank. I believe that is the headline that came about, and I saw it. Now, it is possible that he may come out with new issues. My point is, if it was issues which is already within the ambit of the institution, then I'm sure there is nothing new because some of these are already addressed or are being addressed. If it is something extremely new, we'll have to take it up and say, okay, what are these issues? How did he come to know that we did not come to know?
And that's where this story begins. Not with what we know, but with what no one is clearly saying. Here's my colleague and ET's Deputy Vertical Head Banking, Saloni Shukla.
There were constant murmurs about Mr. Chakraborty and the management having issues with day-to-day operations. At one point of time, it became that rather than a part-time chairman, he was almost like a full-time chairman, where he was interfering with day-to-day affairs of the bank. We specifically asked this question to Mr. Jagdishan, to which he said that
if you want to have good governance, you cannot be an yes sir, yes sir, yes sir mode. You have to have views. We are a democracy, as I've mentioned in the past. We are a democratic organization. If you strongly believe, or if we collectively strongly believe that there are certain things which are not right, I will speak up. That is my birthright, that is my duty. that I have to speak up and I have to record that I'm not in agreement with your thought process or I'm not in agreement with your decision.
But as reporters, what we picked up was that there was a lot of interference in day-to-day affairs, which caused angst between the board and the management. So that could be the reason for how this played out. But the board and the management has maintained a public stance that we don't have a reason for his resignation.
To understand the trigger, we need to go back, not to Mumbai, but to Dubai. There were 3 senior executive exits from HDFC Dubai just 2 days prior to Mr. Chakraborty's exit. What does that tell us? Is there a connection? Is this governance rupture that has come to light? What do you make of it?
Okay, so this particular issue dates back to several years ago, but there were a lot of regulatory changes on this. I will take a few minutes to just take the viewers through what exactly happened. So HDFC Bank has operations in the Middle East. It has a booking center in Dubai and an onboarding center in Bahrain. So even if the clients are in Dubai, they are onboarded through Bahrain. So this is the structure which they have been following for several years. These are HNI clients and they were sold AT1 bonds. After the Credit Suisse fallout,
the Credit Suisse crisis in 2023 followed years of scandals, bad debts and risk failures. Clients started pulling out money en masse. Now, what are AT1 bonds that Saloni spoke about? They are high-risk bank bonds that pay high interest but can be written off or converted to equity if the bank gets into trouble. When Credit Suisse fell, the value of its AT1 bonds fell to 0. And so,
these AT1 bondholders complained to their regulators that they were missold these bonds and they were, not onboarded in Dubai versus being onboarded in Bahrain. So Dubai Financial Services Authority took a view that there were regulatory lapses in onboarding these clients, and these clients said that they were not explained the nitty-gritties of the AT1 bonds and the risk, so to say, involved in it. So after which the Dubai Financial Services Authority took a call that they barred HDFC Bank from onboarding new clients, and they asked them to follow the proper regulatory channel, do their onboarding and various other things. The HDFC Bank management is saying that
it is not a missell, it is more action taken on the technical gaps on onboarding and documentation. There is no fraud. There is no misappropriation or integrity issue which is surfaced thus far. I think we are making a little bit of a noise on this particular one.
But, this topic is debatable because there is a human angle involved on it. So this is what happened, to which they set up a committee last year in January. They did an internal review. These 3 particular people were, which includes their group head branch banking, Mr. Sampath Kumar. He and other 2 were placed on suspension. And all these particular employees were sacked last week, just a couple of days before Mr. Chakraborty's exit.
Now, the jury is out on whether it was the Dubai fiasco that brought the relationship between Chakraborty and HDFC's management to a head. I say to a head because over the last 1 year, the bank has faced several glitches which has shaken, although not eroded, investor and depositor trust. These include credit card outages that left users stranded, recurring tech glitches, even GPS tracking issues and services. In fact, according to reports, right after Chakraborty's exit, the RBI stepped in and said there were no governance concerns around HDFC. And yet, the bank's stock faced a sharp market sell-off.
First of all, the important thing for any banking institution is trust. Trust is the biggest currency, as we say. And the language used by Mr. Atanu Chakraborty, who was the then chairman, who had spent more than 5 years with the bank, to use such a harsh language sort of led to a big suspicion in the market that, hey, what is wrong with this bank? In fact, in an unprecedented move, the RBI came out and said that, this is a domestically systematic systemically important institution, and we are cognizant of what has happened, and there is nothing wrong with the bank. So depositors are safe, everybody is safe. But still, after that, the stock fell. The next day, the ADRs, the American Depository Receipts, fell by 4%, and the stock fell further. So that is the sort of damage and skepticism that the letter has caused, among investors about the governance standards in the bank. And that is why we see a sharp sell-off. In the last 5 years, the bank has given negative returns to its shareholders. So, there is also a lot of questioning about what is the future. Should we stay invested in this bank? Should we, go out there? The merger is also taking a lot of time to show results.
HDFC's merger with HDFC Bank, announced in April 2022 and completed in July 2023, was a 40 billion mega deal, the biggest in Indian banking. It created a financial giant, but it also brought complexity, integrating systems, managing regulatory norms, balancing liquidity, and aligning two very different cultures under one roof. Is digesting such a huge fusion creating complexities that outpace internal oversight?
Yeah, it could be. See, because they took such a large asset base without any deposits, and they are trying to run down those borrowings with deposits. As you know, at this particular time, it's so hard to, get deposits because we all have become investors. Everyone is channeling their money into other avenues of investment where we are getting better returns. And this particular merger, especially because it targets a particular segment, the home loan segment, as of now, the numbers that they give us is that only 4% of their investor base, has home loans. So it's a long runway of growth that they have. But they also have these challenges of garnering deposits. They have a very high loan to deposit ratio, which has scaled back to, again, about 100%. So those issues, continue to play out while they say that the coming financial year, they will be growing more than the market. We will have to see how that plays out. But still, there are a lot of question marks swirling around, governance and, the growth of the bank.
Got it. You spoke about governance. Now, that brings me to the question. Chakraborty was non-executive chairman and an independent director. That's a really important position in terms of governance. Does his resignation and the problems that he had, and the resignation followed those problems, does that indicate limitations in that position where Indian financial institutions are concerned?
Absolutely. This is a very fair point. It has to be debated on multiple forums. Just want to take you back to what happened in IndusInd Bank,
which was an over 2,000 crore rupee accounting scandal that exposed governance issues in IndusInd Bank's board and management.
This was the same issue that played out. It was said that the chairman and the independent director sat through what happened, in the bank. And in this particular issue as well, now Mr. Jagdishan is saying that we will go back, in last 5 years of all the decisions that the board has taken.
We have to do a lot of things proactively. All the decisions that we have taken over a period of time, or all the matters that have been surfaced for debate and deliberations. Can we re-examine all that? Can we see whether there is a need to even improve upon or enrich upon, at least take stock and try and evaluate all the action points of the decisions that we have taken, whether we need to re-examine that. We want to do all these things, and that is something that we will be doing over the next couple of weeks or a month or so.
So we are seeing like a big scale back as to what, they're rethinking their decisions, or maybe they're rechecking, re-evaluating what they have done. So this particular episode and what happened in IndusInd and other, large institutions, the role of the independent director and whether the chairman and whether there should be more board oversight. There should be, more powers given to the independent director. That is really what the RBI has to think, because these institutions are subjected to a RBI review anyways. They have an annual inspection by the RBI. So as far as irregularities are concerned, more or less, the RBI is checking on the financial aspect. But the governance, the oversight, should independent directors have more power? That is something that the regulators will have to think about.
Do you think in his interview, Mr. Jagdishan was clear about how they will make sure this does not happen? I know this 5-year review is very ambitious, but did you get a clear answer? And aside of that, what are you hearing from your banking sources?
So he basically said that, this is a very large institution, and I'm not downplaying the fact that, some of these issues may crop up again and again. And whenever they come to us, we will address these issues. But, Anirban, even considering the points that he has said, the institution has become so large that, they are having constant human related issues, be it senior level exits. We had a very senior person on the corporate banking which quit. His resignation is also, under a climate of doubt. Then there was another board member who quit. His resignation is also, there are a lot of rumors floating around that, why he did not renew his term. So there are multiple such issues that are floating around the bank, which is the reason why you see the sharp sell-off. Because now there is a doubt in the minds of the investor and the stakeholder that whether there may not be any financial irregularities, but is the governance of this bank top-notch? That is the particular issue that, has hit the investor's mind. So what we are hearing is that they are going to do a reshuffle and, they will rehaul the management. This is something they have done twice in the past, in the last 5 years, where they have rejigged portfolio. So they are doing that again. We are also hearing that they will rejig the board as well. They also have 90 days to appoint a new chairman. So that process will also come in through. I think in the next month or so, Mr. Jagdishan, his term ends in October. But generally, 6 months, before the term ends, the board and the nomination and remuneration committee sit and decide as to who the next CEO should be. So that is also, a lot is happening at this particular juncture. So the timing of Mr. Chakraborty's resignation is also a question mark as to why it did happen right now, just 1 month before, the board would decide the reappointment of Mr. Jagdishan.
So we are left with a paradox. Regulators see no issue, the bank sees no crisis, but the market clearly senses discomfort. Like Saloni said, in banking, the biggest currency is trust. And in this banking behemoth's case, that has been shaken. Here's the message Jagdishan gave the bank's shareholders and depositors at the end of the ET interview.
Number one, the values, the ethos, the value system and the governance principles is something that we are very proud of, and that remains intact. The organization continues to be extremely strong on its financial metrics. 3, the trust that the brand has always been representing and delivering is something that continues to happen. Any issues that come about in the day-to-day operations, whether it is errors and omissions or conduct, are addressed appropriately without any hesitation. Number 4, the future is bright. We are very well positioned to coming out of the merger digesting the merger. I think we seem to be extremely positive about what India offers as against the other parts of the globe. Our economy seems to be in a much better position to capture that kind of an opportunity going forward over the next couple of years.
Now, what are these reassurances worth? We will tell you over breaking stories and this podcast over the next few weeks. Watch this space. That's it for today. You were listening to this episode on The Morning Brief. It was produced by me and Vinay Joshi, sound designed by Rajas Naik. A new episode of The Morning Brief drops every Tuesday, Thursday and Friday, wherever you get your podcasts. Keep listening, stay tuned.